What do you get when you get a new low for the recent down move, a rally, and a higher close? You get some bulls out there, kind of rearing up. Got a couple in the background, going to bring them on in a second. Two guests today, Matt Tuttle, you know him, creator of ETFs. Raghee Horner is going to set us straight at 8:35. Talk some earnings here, some good earnings, some bad earnings. This is your show to end the week in the markets. Pre-market prep.
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day.
Good morning, traders and investors. Let's get things started. S&Ps are up 11 handles, 39.95.75. The buck backing off here, back in the 104 handle, down 24 and a half cents at 104.75. Bonds up almost a stick, 123 and 28/32. Crude just can't get up to that $80 level, down 31 cents at 77.85. Gold finally making a move. Big area here at 1855, up 1170 at 1852.20. Silver up 28 cents, back in the 21 handle at 21.18. And Bitcoin taking a little bit of a hit, down 1185. That's 22,405. Let's bring in Triple D and Triple D. Let's talk about the after hour. Well, let's talk about the action from yesterday, a little bit of the after hours action, and why you're getting the chopped bull, the bullish chop is what I'm going to say to you.
Yeah, I think so. We were oversold, and again, I'm predicting, and I'm going to continue to predict this for the foreseeable future, that we are going to go sideways. We just sold off 7% in February. We were getting down where we were oversold again. I think your range is 390 to 410. I think that's going to be the range for the foreseeable future. So you start getting lower 390s, you're starting to look at what to buy. Start getting up in the upper 407, 408, you're looking what to sell. But trading the chop in between too. You get a 30 through 40 handle up day. Maybe you're using it to take some profits. You get a 30, 40 handle down day. Maybe you're using it to buy. Just playing the chop, because I think the people who are directional, they're predicting a big bull market here this year or a big bear market this year, are going to be wrong. I think we're going to be sideways. And so far, so good.
Well, at least from the price action that I saw yesterday, to me, it was more about that Max Payne type of trade, Dennis. It seemed to me like really quickly everyone started getting really bearish again. Especially with the price action that we had in the kind of the pre-market action. As we broke through the range, we recovered that range and we're pretty much broke back to the upside through even the hourly kind of trend line that you could draw. At this point, I think at the end of the day, we're still holding up. We still have the golden cross. I think we can run right back there towards the 410s and start pushing back in the short term until CPI.
That would keep us in the range. So I'm with you. I think it could go either direction here. I just think we stay in the range. We're going to chop around until we get a major catalyst to take us out. And that would be, I think it's going to be geopolitical. I think it'll be an issue with China or potentially, something else. I think that might be the major issue. Or we get to the next earnings season a month from now. So right now, let's just put it in perspective. We just had like 150 companies report yesterday. We are basically through like 90% of earnings season here now. You're going to get next week, you're getting a few stocks, CrowdStrike's reports, DocuSign. I'm just looking at the list, but we are talking about 100 companies reporting all week. So a lot less companies reporting next week. As you come out of earnings season for this next month, it's going to be quiet from the earnings front. I think next quarter, it's going to be a tough earnings season. I do think you're starting to see a slowdown in the consumer. But, also CPI, was ticking a little bit higher. There's a lot of things to worry about, but I don't think any of that materializes in the next few weeks either, which may give us that relief rally. And again, to your Max Payne point, I mean, the market's all about Max Payne. It always has been. It's punishing the maximum amount of participants. And the maximum amount of participants being punished here, because everybody is super bullish or super bearish, I think you still punish the maximum by just going sideways and chopping the hell out of them.
I think today's a big day for the market, because we've had this chop, right? We really if you look at the dailies on the S&P or the SPY, it's kind of like up 2 days, down 2 days, flat, up a day, down a day. You had a strong day yesterday. You talk about the 2-day move. We're in the upper range for the week, right? We're hugging, my weekly swing number. So I think it's an important day for the bulls. It's always establishing that higher support, right? You make a new low for the move. That's way down there at 39 and a quarter. So, the other thing too is in this market is so fickle, right? Don't you have an ISM number coming out at 10 o'clock today? And the market may be up and everything, and then a super hot ISM number, and oh my God, we're going to 6%, and then they'll flush everyone down the toilet. So I think today's an important day to establish that bid for the S&P to get over 4,000, make a new high for the week, and then build a little base at 4,000. So still neutral, short-term neutral here, trying to go a little bit bullish. Still think the high for the year is in though.
What about when the Dow hit 10,000? And there was a stat. Do you remember how many times crossed down over 10,000 and up over 10,000? Somebody said, I think the stat was like 68 times that it just crossed back over it. Like it got up 3 or 4%. I think they used 3% as the threshold. That got up and down and 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 up and down over the course of a decade. Crossed over it like 68 times. So you go back down, you can see where I'm talking about there. So look, 03, and we hit it for the first time. If you go back further, we hit 10,000 first time in 1998. So you're not going to see on this chart, because it's only a 20-year chart, you're not going to see all those other crosses that we had from, when we got over it in like 1998 or 1999. It was right around there when I first started trading, because I can remember the bells and whistles. I think it was 98. And then it got up, and then it came back down. Then it went for a ridiculous run in 2000. I was like, 10,000 in the dust. And then we came back down, up and down, up and down, and up and down, and up and down. I mean, we really had a period of 10 years where we really went nowhere.
Nowhere, yeah.
Nowhere. Why can't we do that again? Not saying 10 years.
Just look at the next 10 years. That's why, Dennis.
What's the next 10 years going to look like, Mitch? Because I don't have a crystal ball. Please tell me what
from 09 to 20 is just straight up, man. It's like straight up.
What? So what are you saying?
Like I'm saying, well, you compared that time period where it was sideways, right?
Yeah.
And that's kind of this block. I'm on the DIA, not exactly the same, right? But
sure, that's
you
good.
can see
though.
that's that block.
Using.
That's the block that Dennis is talking about.
Why can't we create one of those again?
Because this is a tendency of our markets now, man.
No, that's a tendency of a bull market. So when you go through periods, so if you go back to like 1950s, when we got to the Dow 1000 in 1968, we stayed in 12 years until we hit 1,000 again through that period from 1968 to 1980. You have these periods where the market just does a hell of a lot of nothing. I think, it's just going to take time because valuation is still not very cheap.
Yep.
So a lot of times you just need digestion periods where you've had huge runs. We've had a huge 10-year bull run, to your point here, Mitch. And I think it's time to digest. I think it's time to take that back in. I think we could have a prolonged period where contrarian trading wins. Momentum trading has been winning for a decade. Maybe it's, and again, if we go back to 2002 to 2010, contrarian trading won then. Maybe we're just entering another period where contrarian trading could win. And I mean, that's all we are. We're in the prediction business on this show. Let's be honest. I'm a contrarian at heart. And obviously, I try to follow trends and you have to adjust for your trading strategy. But in the last year, contrarians have been winning. What's to say it has to stop right now? We have to go back to new all-time highs and we have to continue higher. I'm just saying there's a possibility that maybe that doesn't happen. Maybe we just go sideways.
I think Mitch is taking the opposite, side of the coin here and saying because we had this ridiculous run here, he thinks that there's going to be more of a down market, with the factors we have going on. But
let's answer that question. What do you think?
I would just do it as just pullbacks, right? It makes sense for pullbacks to happen. We already went back to 23.6. I'd go off the fibs. You can get retracements off this, but I think the trend continues in the long run to the upside.
So you're
And that's
bullish
just-
in the
So
long
you're
run.
long-term bullish then.
He's long-term bullish. I mean, if you got a 30-year time horizon, you should
We're
be.
talking 10 years now, right? We just talked about a decade. So yeah, in 10 years, yeah, I would still be bullish. The market has never told me not to be bullish after those kind of 10 years. But then again, what the chat said, the comment that Bill made is not too bad, right? When have I been trading? I've been trading since what, 2018, right? And so you guys have a lot more experience dealing with a little bit more of that bear market than I do.
But you can, look at charts and you can see the periods that I'm talking about and just saying there's a possibility.
Of sideways
Markets
action.
don't always go up. And you'll hear people that say, oh, if you hold for more than 24 months, you always make money. And those people are absolutely mistaken because there has been multiple periods. Again, we had a period from 1968 to 1980 where the markets did nothing. We had a period from basically 1999 till 2012 before we started getting back to all-time highs, a good 13-year period where it did nothing. Do you know why it did nothing? Well, because the Fed turned policy in those years. We had ridiculous valuations in 1999, and the market had to catch up to it. It's like Microsoft, it was trading at 60 times earnings and had to turn around, and it ended up trading at the low after the financial crisis, ended up trading down to about 11 or 12 times earnings. So, and then it had the explosion up because then the stock, the fundamentals could catch up with the price. So it took a good 12, 14, 15-year period for Microsoft to actually catch up with the price. We know Cisco never did. CSCO never came back to where it was 23 years ago. Intel never came back to where it was 23 years ago. But, certain stocks, obviously, stuff changes. The good companies did find a way. But I just think everybody's got the expectations that if they buy today, well, even if the market goes down, I know I'm getting my money back in 18 to 24 months. And that's not always the case. And on individual stocks, it's absolutely not the case. On the indices, if you want to just be an index trader, that could be the case. But I think we could go into a prolonged period where valuation needs to catch up to price. And I think we could go into a prolonged period where we may not have huge gains in the market. So if you're a trader, and again, if you're a long-term investor, maybe you don't care about that. You're just holding 30-year time horizon, you're buying stocks. But if you're a trader, you absolutely have to care about that because this is how you pay your bills. So you've got to be, trying to predict the environment. And I'm trying to predict it early. And I'm saying we're going into a contrarian tape. We've been in it for 1 year. I think it continues.
And we can, it'll be interesting when they write the history books about this market period, the period, the COVID period, 20, the moves in 20, the moves in 21, then the moves in 22. I mean, I think those are going to go down just like historical, volatility. And after you have, super high periods of volatility, it's followed by, consolidation. And it's just about, adjusting not only your portfolio, but your short-term trading and your short-term thinking. But from what, I've seen it, I mean, the volatility, I know we still have a lot of these crazy rips and everything, but the SPOOS hasn't even had right around 100 handle range this week, which is really very unusual, and things are just calming down. And when things calm down, there's just different patterns of trading. And I think that's what Dennis, you're making a great point on that. The markets are more to do chop and go nowhere than they are to see the moves that we've had in
And after
2020,
periods of heightened
21.
volatility, we often do have a long consolidation or periods where the VIX comes down a lot. I mean, we've hit the VIX under 10 if you go back, and it's been a long time since we've been there. But I think we could go into a prolonged period where stocks do a hell of a lot of nothing. So, but we're going to move on here. We've got Matthew Tuttle coming on here. I'm very excited. He's got new products to talk about, so let's get him.
All right, let's go ahead. Let's get to Matthew Tuttle here. He's in the back. Let's go ahead. Our first guest of the day. We got 2 guests today. Smash the like, team. Matthew Tuttle, Chief Executive Officer and Chief Investment Officer at Tuttle Capital Management. Welcome back on, Matthew.
Hey, thanks for having me.
It's always great to go ahead and get into your strategies. Of course, I've been keeping up with you since the SPAC days, but it looks like we're into something different now. Looks like we have some new options here. And I got to say, I think Dennis and Joel and I were definitely impressed by the ticker choices. So let's talk a little bit about that. S Gym and L Gym, the way that I look at it. Short gym, long gym, but how do you tell us a little bit about it, Matthew?
Yeah, and this is something that's been years in the making. I've been trading since the '80s, and have noticed that the consensus seems to be wrong a lot. And but how do you monetize something like that? So the cool thing about someone like Jim Cramer is he really is the consensus, and he's a guy that swings at every pitch. And and that's not a criticism. I mean, he's in a position where he has to. And so to me, this is a great product for people who are looking for some sort of diversification in their portfolios, which they ought to be these days.
So we've got the long Jim LJIM fund and the short Jim SJIM fund. Tell us about, and obviously it's tricky to just track a person here. You've done it with Kathy Wood very well, but she's got her holdings out there public, so it's a little bit easier to do. How do you do Jim Cramer?
So unfortunately, we've got to watch Mad Money every night.
And you gotta ask me because I watch that thing every day. Hey, Dennis, what was he bullish and what was he bearish on?
Wow. Okay. I mean, I feel bad for you. Bad for me now too. But yeah, we got to watch Mad Money every day, and we got to watch him. I mean, he's on like 8:45 to 10, in the morning on CNBC. We got to watch him, and we got to see what he says, and if he is definitively bullish or bearish about a stock or a sector, then we're taking action. If he's not definitive on something, then chances are we let that thing pass.
What about his fund that he sends the newsletter out? Do you look at that and figure out well, he's bullish on this? Are you looking at his positions from what he's doing in his actual fund?
No, so we're not looking at the investment club at all. I'm not a member,
Okay.
and I do that, deliberately. To me, that's something he probably has other people working on. It's a longer term type of thing. What I'm more concerned about is what's coming out of his mouth today,
Ooh, nice.
Tomorrow, and and what are people calling in asking about? Because I want to get the more timely things. I'm not looking for, hey, what does he think is going to be good over the next 10 years? That's not interesting to me for this.
Have you, does Jim Cramer know about this, or do you know if he knows about this? Has he mentioned it?
He knows about it. I mean,
he knows.
Yeah, he made some comments and some tweets, and I know on some of the articles that came out, they reached out to CNBC for comment. Interestingly, he's away for it looks like a week. I don't know whether that's a coincidence or not. He just took a week off.
He got scared. He got scared, Matthew.
Vacation. Let's talk about it. That's a planned vacation.
Yeah,
I got a question for you.
I
got a question for you. So we know that he moves stocks, right? With his recommendations, with his picks and his pans and everything. So what do you do? Do you take the mark from that day? Do you take the opening price from the next day? I mean, for me, from my perspective, the closing print on that day, that's why I have a show, the closing print is the most important thing. How are you doing that? How are you tracking? Are you using the closing print from the day that he mentions it? Are you using the opening print from the following day? How are you doing that?
So we want to get in as soon as possible. And, along those lines, like the other day, before we came out, it was a couple of weeks ago, he sent out a tweet saying, hey, time to buy oil stocks. And within a couple of minutes, oil stocks went down for like an hour. Could have been a coincidence. I don't know. But could have been something going on. So we want to get in at the next opportune moment. So if he mentioned stuff on Mad Money last night, we're getting in at the open. If he mentions something on CNBC at 9:45, then we're getting in at 9:45. And if he sends a tweet at 1 o'clock, we're getting in somewhere close to 1 o'clock. We don't want to mess with it. Once he's out on something, I want to be in that or opposite that as soon as I can.
So
How many
again,
people do you have tracking this to do this?
So me and two other guys. They probably hate me right now, but it is what it is. I mean, when you sign up to work for me, you're going to do some interesting stuff.
So so basically, when you get an idea, you put it in the long. If he's bullish it goes into the long Jim fund, and if he's bearish it goes into the short Jim fund. So both of those obviously ETFs are going to move exactly opposite, correct?
Not exactly opposite.
Okay.
So the biggest difference is on SGIM, if he doesn't like something, we're going long. On Jim, if he doesn't like something, we're not shorting it. When I originally came up with the idea, I was thinking of, hey, if Jim doesn't like something, we're going short. And then I realized, I'm a trader. You guys are traders. I got a ton of stocks I don't like that I would never short. So
right.
I changed my mind on that. So they will not be the exact opposite of each other.
Do you have like a threshold for volume? Because sometimes somebody will call in on Mad Money and they'll call on some small cap stock that's really low. Will you avoid those just because of liquidity issues?
I won't avoid them, but the idea is I want equal weighting unless there's something that's going to be more volatile. Like, the meme stocks, for example, when he's out on those, I probably won't have those at the same weight as like a NVIDIA or, a Tesla or something like that.
What about crypto?
So crypto, so right now, for example, in SGIM, we own BitO because that's the easiest way for me to gain exposure to crypto.
Which, I'm sorry, what symbol?
BitO. So that's the long Bitcoin
okay.
ETF.
Okay.
Yeah. So we're not gonna it's an ETF. The SEC is not gonna allow me to go out there and buy crypto. So if he says stuff about some obscure coins, then we'll have to walk away from that, and nothing I can do there.
Matthew, is there a place where we can actually see the holdings?
So the fund's website is CramerETFs.com.
Yep.
And we're going to send out a daily, basically newsletter like ARK does on their trades for our trades that day. So the holdings will typically be updated before the market opens. And my goal will be to send out our trades for the day, either after market close or, first thing when I wake up in the morning.
I love the site. I just went there right now, CramerETFs.com, and you got New York going up, and then you got the inverse.
I wanted his picture, but I'm not sure whether
you don't want to put his picture upside down.
Are you done any back testing on this at all, or is it just relevant? Just you need the information as it comes out. It's all new information, so no back testing available.
So back testing is tough because there are a lot of times is he really positive? Like David Faber will be like, hey Jim, what do you think about Alphabet earnings? Oh, they had a great quarter. Is that a buy, or is that just they had a great quarter? But I wouldn't, who knows? And then when do you sell something? There have been guys who have done some back tests. Basically though, to me, again, Jim's like the consensus, and we know that the consensus tends to be wrong. And so, that's what I love about this. On the SGIM side, as the market is going up, SGIM's going to get more and more net short. As the market's going down, we're going to get more and more net long.
Yeah. And
I think that's something you ought to have in your portfolio because it's going to be different than everything else you're doing.
This seems a little bit labor intensive. You've got a pretty low, I was looking at your expense ratio. It's only 1.2%, a little bit of labor intensive here than some of your normal funds, maybe, Matthew. Is it going to be justified? You got those kids working hard for that 1.2%.
Yeah, and it really isn't 1.2%. We've got to put in acquired fund fees in there, which are the expense ratios of ETFs we may or may not own. And right now, the only one we own is BitO. So, but from a prospectus standpoint, you got to do that. So it's under 1% for us. sometimes the best things out there require the most work. And to me, somebody had to do it. And if that somebody has to be me, it has to be me.
All right, last thing I'll leave off with, of course, I can't leave you without mentioning, of course, Kathy and Sark. It's been a great ride. It's pulled back here. And what do you think about the recent action from Kathy's ARK Invest?
Yeah, so and I'm in Dennis's camp from the standpoint of I don't think we go anywhere in the market until either the Fed blinks or the market blinks. So, I would be using Sark tactically here. I always laugh when I see the articles like, oh, ARK is back. Like, no, they didn't all of a sudden get risk management, trading, research, all that stuff right. Rising tide lifts all boats. At some point, that stuff gets ridiculously oversold. And so when you start seeing those headlines, I load up the boat on Sark. When Sark, and again, I think we're in the trading range. So when it gets too high, I sell it, and maybe I buy ARK, and and just keep playing that game. I mean, if they're going to ping pong us back and forth between the highs and the lows, take the free money.
Well, thank you for joining.
One more note. I watched Kathy interview, I think about a year and a half ago, and she was talking about your fund. They asked her the question about betting against, and she was so upset that your fund exists. She was flustered. It was an interview that very much surprised me that she was so flustered by your product. She's like, I can't believe that somebody would just be so against innovation. And she didn't even talk. You have the long fund too. Like, she didn't mention, the long fund, and maybe she doesn't know it exists, but it's a viewpoint in both ways. But she was so flustered. I mean, I feel like Jim Cramer would take this in stride, but has Kathy ever reached out to you on any of these funds, like to say, what the hell are you doing?
She hasn't. And I don't think she will. I was at an ETF conference and just happened to be at a dinner, and the guy sitting across from me was like her chief operating officer or something. And it seemed, and I may be wrong, but it seemed like he went, normally when you're sitting at a table next to guys, everyone introduces themselves. It seemed like he had no interest at all in introducing himself to me or talking to me in any way, shape, or form. Again, maybe I'm projecting, but so no, she's not. I've never talked. I would love to, but I don't want to make anybody uncomfortable.
Hey, we're gonna have to set it up. Maybe we have a little powwow. All right, like always.
Kathy and Matthew on to talk it out.
Yeah, I don't know about that. I'll short that concept there. I don't think that's gonna happen.
Hey, you can't blame me for trying,
she's never coming on this show. I've said too much bad about her over the years, so don't worry, Matthew. We're never getting Kathy on this show.
You have a great one, Matthew. We'll definitely keep up with everything, of course, Tuttle Capital does. You guys can check out all their ETFs. It's not just these two, right, that we mentioned today, or these three that we've mentioned. There's plenty more to take a look at. Even I'm still looking at those SPACs out there, and we've been seeing some recent action. They'll be back. That's my man. That's my man, Matthew. You guys hear it. SPACs will be back at some point. We'll see. We'll see if we get there. Have a good one, Matthew. We'll bring you back on. Take care.
All right. Thanks, guys.
Thanks, Matthew.
All right. Let's get back to the stock market.
I'm just looking. I just brought up the SJIM holdings there because you can just get them off the website there. It's so interesting too, because I'm looking at it and he's got it pretty good, he's short NVIDIA because, Cramer's dog is named NVIDIA. So, he's short Lilly because Cramer has been pumping Lilly for a long period of time here. Short Meta, which is another one. Bolero, which he talks about all the time.
Bolero, man.
He's got it pretty good.
That's been the best stock.
What's
the
that?
best SPAC out there, man. Bolero.
He's shorted in the SJIM fund. He'll be long in that, probably in the Gym fund, but in the LGIM fund. But if you're just looking here at the holdings there, like AMD is another one. Like if you watch Mad Money for a couple weeks, it's basically he keeps going over the same stocks. He likes these same companies, and then he doesn't like certain companies and definitely hates Bitcoin. So obviously this fund has to own Bitcoin. And there's other ones in here too that he doesn't like. So it's very interesting. I think he's got it not bad. It's very interesting.
All right, I'm going to take us through some stocks here. Let's roll through some of these. We got a lot to talk about. And of course, we got our guest waiting. I saw a lot of chat comments earlier for her. I'm excited to get to it. Raghee Horner going to be joining us just soon in about 5 minutes or so. Let's get to Costco really quickly. Q2 EPS $3.30, beat the $3.21 estimate. Sales at $54.24 billion, missed the $55.54 billion estimate. Q2 23 membership fees at $1.027 billion. A Costco executive did, though, say that we've seen some weakness in what I'll call big ticket discretionary items. And this came from Reuters.
I mean, this is a loved stock by Jim Cramer, coincidentally, as well. But this is a loved stock, and it's obviously traded with a higher multiple for a long time. Valuation is why I've stayed away from this stock for a long time. This company has just run so well. And I think if you ever get back down to the 450s, I think there's good support down there. Mm-hmm. But we keep looking here at, this market that we're in, and higher valuation stocks have got to continue to show that they deserve that higher valuation. So I don't think there was anything really that bad with these numbers, but when the revenue misses, I mean, these stocks get hit, and it is a higher valuation stock. Where's the PE on Costco? And Joel wants to do a technical on this.
Yeah.
Can you look that up? I think it's like 27 or 28 times.
Is it still that high?
It's high still, Joel. Yeah.
Yeah.
It's high. It's a lot higher than Walmart. I'm going to go look.
I have 36.
36.
Wow.
That's the problem. I would love this thing, not even to get to a market multiple because it's better than a market company, but get in the low 20s. Give me a shot at Costco. If we ever went into a bear market, give me a shot at Costco in the low 20s, and I would take that shot. But I mean, at 36 times earnings, you're talking about a stock falling 40% to get to that valuation. So it's still just too expensive for me long term.
Yeah, not a good looking chart. You got a little spike, but you're back down. I don't know about 440, 450, or 460. I think the area of interest to me, just for today's session, you bounced off the 470 area this morning. You had a low at 470.56, and there's a couple daily lows there. That's $4.50 away. So if you're looking for more on the downside, I would look at that. The gap low, I don't think you're going to see that at 462.22. Coming back on the upside here, it thing can go absolutely anywhere, but the bottom of yesterday's range is really not that far away, 475.56. So the bulls want to make a stand, get this back up on the day. They can get it back above yesterday's low, and don't know if we're going to see that closing price of 85.69. People kind of caught in the rally yesterday, so they're going to be looking to peel out today. So 470, 480 maybe, potential range for Costco.
All right, let's go to a stock that will definitely be on retail's mind today. C3AI, Q3 adjusted EPS at a loss of 6 cents, beat the loss of 22-cent estimate. Sales at 66.67 million, beat the 64.25 million estimate. They do see Q4 revenue to a high end of 72 million versus a 69.85 million estimate. Also raised their fiscal year 23 outlook. And then you saw Wedbush coming in and making a comment. I thought that was really interesting. They said that the company is walking the walk after a strong Q3.
It had its run. There's bag holders all over the place. So I'd just be careful chasing this here today because you got bag holders up at 25, 26, 28, 30. There's all kinds of resistance up here. So you came from support where you found some support in the low 20s, but now you come back up and you're getting into resistance here. I just don't think this is a blast off stock.
I think this is a nice setup here. If you were caught in the stock, you had the high of 30.92. You went into the lower 20 handle. You're getting back half of the move. You also have a daily high right here at 25.36. You did trade up a little bit higher. You did trade up to 26. So if the bulls really want to take control of this thing, man, you get this thing 25.5 bid, 26 bid, and then look for your next daily high. I just would be interesting to see when the liquidity comes in if there's not more sellers at this 25.5 area. So that's the swing number for me here in C3AI.Inc.
There's so many major players that are going to be competing with this. So I don't follow the company close enough to know their products or to know what they're working on. but you are going against all the big guns because they're all going to be in AI, the Microsofts, the Googles, the Metas. It's tough. It's a tough, sell. And then this is trading 10 times sales. Again, maybe this is going to be the company that figures it out and they're going to be able to find their niche and they're going to be a big player in AI. It's very possible, but it's also very possible that this is just a storied stock that got a really cool ticker symbol and got a lot of buzz, got the hype, and is a retail darling. I'd stay away. That's just my opinion.
All right, let's take a look here at one of the, I'll call it the disaster stock on the day. Let's go to Zscaler, Q2 EPS, 37 cents, beat 29-cent estimate. Sales of 387.6 million, beat the 364.91 million estimate. Needham reiterated a strong buy that I thought was interesting on Zscaler, and they maintained a $210 price target. When you look at their fiscal year adjusted EPS, it was put towards $1.53 on the high end versus a $1.24 estimate. And the total revenue guidance was also a little bit higher on the high end. So it doesn't look too bad here. They did do a restructuring plan, which includes a 3% workforce reduction.
As far as support goes, I really can't give you any. So I'll give you the pre-market low comes in at 116.40. You're just into this whole random 110 to 120 area. So 116.40 is kind of in the middle there. We'll keep an eye on that. On the upside, if the bulls or if you get some, if you get a rally going, I think if you get over 120, I don't know where the next stopping point is, right? Because yesterday's low was way at 128.92. So maybe 115, 116, 130 trading range if the bulls try and get this over 120.
One thing I will say is cybersecurity stocks have held up their valuations better than other ones. And you can say, oh, this was $300, 119. But I mean, the valuations of these things are still very extreme. You're seeing CrowdStrike trade down on this. CrowdStrike reports next week. You're seeing Palo Alto trade slightly down on this, which Cramer always says is best of breed. I wonder if SGIM is holding a PANW short. It's just it's a sector that they do like to buy the dip on. So I'd be cautious shorting it in the hole and just saying, oh, it's extreme valuations going back down to the lows. Cybersecurity is a sector that it just seems to get bought on dips. So I'd almost be inclined to buy the dip here on Zscaler.
Not shorting it down 15
No,
bucks.
and looking, again, it's hard to catch the falling knife. How low did we get last night, Joel? It's always good to look at the pre-market lows.
Yeah, 116.40. This is one of these charts where you really don't have a step down seller, but you have a patient buyer in it.
Yeah,
to me,
underneath demand here.
Yeah, just like I'm bringing it in. I took this home short. I got the 125 puts. I'm not sure what it's going to do in the regular session. Hit me on bids. First we started at 116.40, and then we couldn't get much stock. Now we're kind of like at 118. Or we're going to have to go to 119. That's just the way the chart's looking to me right now.
I think I kind of like this on the dip. And again, sometimes it's not prudent to buy right off the bat. Sometimes it takes a couple days and starts to turn. Sometimes they turn right around, though. And you did have an up day here in the market yesterday, and you are continuing higher here. So there could be a few institutional money managers looking and saying, what can I buy? I kind of like this on this dip here today. So it's hard because, it's a scary stock with a scary valuation, and you're kind of in the middle of nowhere. I mean, we could do a 50% retracement. We're through that, too. 100 to 143. That brings you like the 120 area, 121, 122. We're a little bit through that. I think that 114.37 low from the 25th of January, I'd lean on that. But I'm kind of like this one. I don't have no position, but I kind of like it.
Let's go with Raghee.
You know what time it is? It's Raghee time. Smash the like. Let's get it started. Raghee Horner, Managing Director of Futures at Simpler Trading. Welcome back.
Hey, how are you? Good morning. Great to be back.
Good morning.
Pretty enthusiastic introduction for you. We always enjoy having you on. Just broad market talk here yesterday. New low for the move. Nice rebound. We're looking okay today. I know you take a little bit of a bullish slant on this market. What's your key for today? I'm just talking about not individual stocks, but like the S&Ps, the broad market. No real catalyst out there. What are you keying on?
Three things I want to constantly take the pulse of. So we can see the S&P put in a little minor low pattern. We're taking out the high on the S&P futures. So yeah, you're right. Nice little crawl to the upside. It's a bullish pattern. I think the main thing that I've been focusing on when I look at my notes at the end of the day, time frame. What is my time frame? What is my time horizon? And I don't know that I want a really long time horizon at the moment, but I don't know that right now day trading is what I want to do either. So I'm finding myself somewhere in the middle, looking at 1 hour, maybe daily time frames, and I'm looking for maybe a few days of follow through. So just to kind of set the stage, the main two things that have happened this week, the Fed target rate probabilities. We are going back and forth between, are they going to hike to 5.25 to 5.5, or are they going to hike to 5.5 to 5.75? Now, obviously, that second choice is bearish for the market. And this isn't about what they should do. It's what is priced in. So every time we go back and forth between those two, and by the way, you can see this, everyone can see this really easy. Google CME Fed Watch tool, and it's this nice little graph. And when we start inching back towards 5.25 to 5.5, or even less, equities go up, bond yields go down, dollar goes down, and all those nice juicy things that we like start falling back into place for the upside.
You're a big fan of watching the bonds to get your equity indicator then, right, Raghee?
I am. Bonds, I absolutely am. Bonds and Fed fund futures will usually give us a pretty good idea of what yields are doing to equities. We notice bonds are bouncing today, right? We had 3 or 4 down days, down sessions in the long bond. We're up today, and shocking, equities are up. So you're absolutely right.
It's funny because if you go back historically, a lot of times bonds are inversely correlated with equities, but that's not the case here right now. And that's maybe because we're so dependent on rates here. As you start to see the TLT, and I always look to the TLT just because it's easy and it's widely traded. There's been this positive correlation here in the last 6 months to a year. Do you see us eventually breaking that, or is it we're so reliant on the Fed here that we're just going to continue to track the bonds?
If we look at everything pre-2008 and after 2008, we
Okay.
are modern monetary policy junkies. And so you're absolutely right. We've been at this for so long. We start remembering things that
long time ago.
Right, pre-MMT, and now, equities love cheap money. So I'm just going to follow. What are those signs of cheap money? I want to see weak dollar, which is very much in line with a lower yield, whether that be the central bank rate, whether that be the long bond, whether that be notes. I think the market needs, not just loves, needs cheap money.
And it's such a great point, because if I look at the day the TLT topped out was February the 2nd, and then we went down for 3 days straight, and the equities completely ignored it for about a week. But eventually it started to leak. As the TLT continued to break down, the equities eventually started to follow. So it gave you literally a week lead time here, saying, hey, we're sitting up here near the highs, but there's something else happening here under the hood. And that's that, the TLT is going down. And, this is not good news for equities here. So, and again, I don't think it's a coincidence either that, we show a little bit of strength here, and the TLT is starting to show some strength as well. So I love this indicator, Raghee. That's why we bring people like you on who are looking, who've been trading for a long time, and look for us to give us an edge. That's what trading is all about, is trying to find an edge. I've used that for a long time too. What other edges do you look at? So besides just bonds, and looking at the yields and looking at the Fed tools, what other edges do you look at to try to give you a market feel?
The other really, and you're too kind, I think that we kind of stumble into this because so much of this is on the job training, right? You and I stare at this stuff long enough, we start to see the patterns, right?
Yeah.
So
pattern recognition.
Exactly. And I think then, as you and I can then share with other people, this is what we noticed. So you don't have to spend the 30 years. That's the fun part of this, right? But the other thing that I love is the dollar. We got to talk about the dollar anytime we know the central banks are in play, and dollar is such a great way to understand it, such a great barometer. But the dollar index futures, or UUP or DXY, they are the basket, right? So we have euro, we have yen, we have pound, and then some fairy dusting of total of 6 currencies. The best way that I know to understand what the dollar is doing, the best way I know, is to look at the 6E futures. Now, whether or not someone wants to be a futures trader, 60 is such a great way to say this is 58% of the dollar index basket, which is obviously a high concentration weighted basket. Euro goes up, dollar goes down, one zigs, one zags. And every morning I want to see if we're going to see good risk appetite, like you said, that bond, and I want to see euro up. And for those of you that are just getting used to looking at bonds, it's an inverse to yields, right? So TLT, like Dennis was talking about, ZB, then I'll look at the futures. When they're heading down, yields are heading up.
Yes.
And when they're heading up, yields are heading down. So I want to see also euro heading up, and that means dollars heading down. We start seeing those pieces in place. That's when longer term follow through becomes, for me, more realistic.
Dennis, I think you'll get a kick out of this, and Raghee, I'm not sure if you go back this far, but when I used to be a clerk in the S&P 500 pit, the bonds opened up before the S&Ps did, and all the people on the desk would be, "What's the call? Where we're going to open?" This is pre-Globex, and I'd look up at the bonds, and if the bonds were up 4 ticks, I'd be like, "We're up a point." If the bonds were up 8 ticks, I go, "We're up 2 points."
Huh.
If the bonds are down 4 ticks, we're probably down. If the bonds were flat, we're like, "Oh, we're flat open." And that was like, that was before you had all the free flow of for information, and of course Globex trading starting, and actually started on my oldest daughter's exact birthday, June 25, 1992. So a little bit different. S&P sneaking up to the highs of the session here. Raghee, what about the rotation that's going on? I mean, what are you seeing from the rotation? We've had, the healthcare stocks, some of these value stocks, primarily healthcare. You combing the ditches here in any of these stocks, Johnson and Johnson, or any of these ones that have really had a haircut in 2023?
So when I think about S&P, and if the S&P is going to have some legs, obviously XLK, tech's got to move higher. Financials have got to move higher, in healthcare. Healthcare has been kicking my butt on and off. I can't say I look back at the last year or 6 months and say I've got a really great pulse on healthcare. It's going to happen. I don't have a great pulse there, but financials have been looking really good. So if I know financials are looking good, that's number 2 weighted in the S&P. That's number 1 weighted in the Dow. That gives me a better idea of where to look. So healthcare, I think Pfizer has been on my radar for a bit. Johnson & Johnson's been a little bit of a dumpster fire. I think they've got their own issues going
Look at
on.
that thing.
I was looking at Johnson & Johnson just yesterday, and I'm like, wow, this thing. And I do believe that there is this trade, and I talked about it with a guest yesterday with Mark Chaikin. I don't know if it was Mark, it was somebody else. Maybe it was Mark. But I do believe that the reason you're seeing a lot of these consumer staples starting to dump is that people are moving into cash. So like I've said for a while, I mean, it's one thing, Apple, but you've got growth potential. When you're entering a Johnson & Johnson, you're entering a Procter & Gamble, you're entering a Coke, you're looking for earnings stability and you're looking for yield. But as the yield continues to climb, the cash yield, the treasury yield, that becomes competition for stocks like Johnson & Johnson. That becomes competition for stocks, like the consumer staples. That becomes competition for the utilities. And I do believe that competition is showing up, and we're starting to see those stocks show weakness just directly because yields are going higher. What are your thoughts on that, Raghee?
I think when I look at the weighting, and I absolutely everything is a competition for our dollars. So sometimes I'll see the optimism, the risk appetite move to tech, because that's just where we start seeing people feel confident about, I want to get back into aggressive positions. When I look at XLV, when I look at healthcare, I think my issue is if UNH was making lower lows with Johnson & Johnson, I'd say, all right, I've got something to be concerned about. I think Johnson & Johnson's got a narrative of its own right now, maybe around the lawsuits, which seems to be just an ongoing saga.
Forever.
But UNH is holding its own. That's where I for one, just am not right now at one with healthcare. So that's why I've been focusing on financials and looking at XLF.
All right. I want to ask a little bit about something that hasn't been talked about lately. Of course, there was a talk last year all about the grains and wheat. It seems like that chart has really come down here. What do you think about wheat overall and maybe some of the grains?
I'm just pulling it up right now, taking a look. I'll tell you what, I have not been looking at softs and grains once the whole narrative around Ukraine started becoming something that was far more difficult to manage risk within. All I can say is once we started breaking below that 200, for me, one of the easiest places to figure out where I want to stand is price on the daily time frame above or below a 200 exponential moving average. That to me is the equator. Bullish hemisphere above it, bearish hemisphere below it. We struggled with that October, November. Once price actually dove below that in early November, I've got to be bearish.
We'll keep an eye out on that. It's been a tough situation, definitely. And I can say it to all the natural gas traders out there. They've been trying to call the bottom on that one. And they don't call Boyle the Widowmaker for no reason, right? I mean, it's a tough one.
Natty gas is a really interesting story. I'm so glad you brought it up, because when I look at Natty and we take a look at, say, a 10-year seasonal detrended and corrected, right? It's a double bottom towards the end of February. So towards the end of February, if I'm looking for that seasonal to kick in, as it typically does going into summer, and the last week of February is usually when we should start seeing a little bit more traction. And when I look at the daily time frame, the downtrend was broken really this week, finally. And so at least now I can go from lower low probability to now we're looking a little bit at bearish chop. But this lined up really nice with that double bottom and that lower low hitting in February. And then if the seasonals are spot on, it should be a climb from here on out.
At least you have a reference point, right? You know where you're wrong. And I mean, this little thing is pretty volatile, but it's had a couple up days and a pause. We were talking about this one yesterday. Well, Raghee, any final comments for today?
I love that we're just kind of crossing all sorts of markets, wheat and natty. And I love what Dennis is saying about healthcare and the competition. That's such an important thing. Where is money going to go looking for a return? And sometimes it's just going to be hiding out, and other times it's going to be like Dennis said, going in cash. I think at some point, if yields can continue to drop as TLT, as ZB climbs, I'm going to continue to remain bullish. And then, keep an eye on that 200 on any symbol. If we can get above that, Tesla's at an interesting point, sitting with 200 overhead, and we can see how much trouble it's had. So that 200 has really been helpful for me these last few months.
A quick one right here. What do you feel about golden crosses? Because we had a recent one, right? I mean, you're mentioning the 200 here. What do you feel about golden crosses? Do you feel that they hold? How do you use them?
I'm less interested in two moving averages doing the tango than I am price getting above a certain moving average. So if it's an incremental price above 20, price above 50, price above 100, price above 2, all I know about that 200 is people who would never consider themselves chartists are always keenly aware where price is relating to that. So I want to see price and the moving average interact. But then you're right. Is that going to also accompany the 50 crossing up and down? The 20? Yeah, of course, at some point. But it lags a little bit, so I usually don't use it.
Love it. Love it there. You guys keep up with everything Raghee does. You guys can check her out on Twitter. She has a great following. We'll see you next time. Take care.
Thank you. Thank you.
All right, let's go ahead. Let's take a little peek. What are we looking at, Joel? How are we looking in the
future?
We made a new
high. We made a new high for the session. 06.25. This was the area of Tuesday's high. Weekly swing number right here too. So the bulls are doing the work. Little pullback that we had there just came into the top of yesterday's range. So nice target here. If the bulls can keep a bid here, and what's I said, I know we have ISM. I mean, why not? Why not take a look at the 4-day high, 24.75. That's the highest we've been so far this week. So see if we can end on a strong note.
I think we got to look at that 401, 402 area too. As you know, boom, it's like, oh yeah, the bull is back. Well, let's just look what we just did and remember what kind of environment we're in. And then sometimes it's just a good idea to sit on your hands, because we just were down at the lows yesterday morning and people were talking about, taking out 390 and going back to the lows. And then boom, we turned it around and we just rallied 70 straight handles. If we are in a contrarian environment, I don't make a lot of money buying stocks after they've run up 70 straight handles. So just keep that in mind. We may go straight to 410, but I think you'll have a check back or two on the way there. So if you are bullish, and it's okay to be bullish, it's okay to be bearish, I think you want to be buying on the dips as opposed to buying on the rallies. And if you are buying this morning, you are absolutely buying on the rally. And I silenced everyone.
Mitch, are you on mute? Do we lose Mitch?
Mitch
The
is on mute.
old mute trick.
You
When do
never
you guys
do
see
that.
me doing mute tricks?
Mitch never does that. That's Joel's trick. You're taking one from Joel. You're watching Joel too
I was
much.
sharp early. You
Yeah.
can't be in the zone all the time, right?
It's so funny.
That's how it is, man. That's how it is. All right, let's take a look at maybe one more stock. I know that we've covered a lot, but we didn't get to Broadcom, so I just wanted to make sure that we at least touched it really quickly. Let's at least take a look. EPS $10.33, beat the $10.11. Sales at $8.91 billion. Beat the $8.90 billion estimate. They did declare a $4.60 dividend payable. Ex-dividend date is March 21st.
We should have Workday sponsor the show, right? Do they do that Zoom thing where the guy's trying to talk? And do you remember that commercial? I guess not. Trading at the highs of the pre-market session, so looking good. 611. We're bid here. What has been the recent high of the move? 617.01. Yep, 617.01. I'll just give you some potential targets on the upside here, and then you guys could talk about potential buy areas. The first target above where we're at now, 614.93, and then 617.01. That's
I think what I want to talk about here is oil. We just collapsed.
What
I don't
happened?
know what just happened. I don't know what just happened. All the oil stocks were trading flat, and we just got hammered here. So bring up, you know, if you want, you can bring up the USO. It's probably the best thing to look at here. We were trading flat all morning, and just in the last few minutes,
I'm looking for it.
Yeah, we just got hit really hard here. So I think there's a headline or something. You can see it there on the candle there, just in the last few minutes here. USO falling substantially, and crude falling substantially here too. Not sure what happened, but we've definitely got a headline here.
Maybe something out of China or something like this.
There's a headline here. They don't move like that on nothing.
Yep, there's a 1 minute chart. So for you crude traders there, and I can also pull it up with the USO. I'll have to get the pre-market action in here. So we will wait. We will wait to see what happened on that. That big drop there. It seems to be good for the market, though.
Market's ignoring it. Yeah, and you know what? Sometimes lower crude is good for the market here, and I don't think it's a coincidence. And we've seen this for a while here now. Again, lately, it's just kind of choppy. Everything's been choppy, but there's a loose negative correlation between oil prices and obviously, if oil prices go down, that's disinflation happening right here, or deflation actually when they go down, which is going to help us with the whole disinflation narrative that everybody has been trying to bite on. So I think lower oil prices do help. That they do help the equity markets. So I'm not surprised actually that the S&P is starting to catch a bit here as oil falls.
And I think you're seeing some softer inflation data coming out of Europe too. I don't know if that relates to the crude market, but that could definitely be giving a boost to the S&P futures trading at the highs of the session. So what else do you have for us, Mitch? 2 minutes remaining. Do we want to take a stock from the listening audience, or do we got another one? How many did we miss today?
We can do Marvell. Maybe
let's do Marvell.
That one in. All right, let's get in that one. Marvell Technology Q4 EPS 46 cents, misses the 47-cent estimate. Sales of 1.42 billion, beat the 1.40 billion estimate. They do see Q1 24 revenue to 1.3 billion plus or minus 5% versus a 1.38 billion estimate. So they gave you that kind of like bottom guidance and above the guidance there. So I think that wasn't definitely like there. Marvell coming down strong today.
50% retracement is right here, right now, the overall move. So going from 33, Mitch or Joel, you can draw it on the chart if you want, but 33 up to 49. I'm taking 16 points. I'm taking off 8. I'm putting that at 41. Yep. I think you find support 40 to 41 here. It's been trading there most of the after-hour session, so I don't think you have to hurry into this one, but I do think you're going to find some support in the low 40s.
Yeah, until the pre-market action and after hours action, you had 42 as support, a couple lows in that area, but 40.77 was another low. But that was the first thing when I pulled this chart up, I'm like, well, this probably had a strong January, right? Pulled back a little bit in February. So if you thought this was a major long-term bottom here, you're getting a chance on a little bit of a pullback. I agree with you there on Marvell Tech. Dennis, you sold that thing, right? You've been in and out of that a few times.
Yeah, I've traded this one really well. There's certain stocks and swing trade it really well. There's certain stocks you do well on, and there's other stocks that you don't do as well on. This is one that I've just, had some luck in the past. So I've traded this one well. I wrote it. I've rode this kind of thing a couple of times with some pretty good money. From an investment standpoint, I had it for a long time. And then from a trading standpoint, I've done pretty well on it too. It's one of those that I trade pretty well. So I've got a pretty good feel for this one. I think 40 to 41.
Okay. All right. Fun show today. S&P still ripping north to the upside. We'll just we'll see if we got the gas to get up to Monday's high, 24.75.
Oil's still going down hard right now. What is that headline?
I looked around. I only saw a headline from Wall Street
here.
Journal that was natural gas. It wasn't necessarily
We got to go further than the Wall Street Journal.
Trust me. I've looked. I can't find it right now. You guys let me know if you find something.
There is something.
The chat was
doesn't
looking
just fall
too.
off the bed like this. So let's just go. Before we go to the show, I'll look quickly at my sources.
Go ahead. Look it up, man. By all means. There's nothing wrong with
UAE has privately pushed OPEC to let it produce more oil. That is from the Wall Street Journal, just breaking a few minutes ago.
OPEC.
Here. So looks like OPEC is going to produce more oil. Is what they're pushing for. So UAE privately pushing OPEC to let it produce more oil. That is your headline. That is why we just saw oil fall out of bed. That actually came from the Wall Street Journal.
So now we got to be careful because a lot of stocks are near those lows, at least daily bunch up pattern, right? Like this XOM, Oxy, they're all near that kind of bunch up pattern there. So they could take out lows today. I'm going to keep watch. Chevron already kind of dropping fast there. Look at Chevron.
Yeah.
That's already cracking there. You can see it here on the 15. Look at that little crack there.
Yeah.
That's a nice crack there on Chevron. So got to watch out there today. We could see this start to break down. XOM also right now starting to head down too. So keep your eyes on some of these oil names. They could start heading lower. And who knows? Maybe this starts to really crack that XLE trade, right? We'll see what happens on XLE. It was starting to make a little bit of a bounce off support. Now trying to come back up through 86. Now rejecting. It could come towards, I see some lows around 83.45. 83.62 and then 83.04, kind of the 83 spot. We'll see what happens there. XLE and the oil stocks coming down. All right, that's going to do it for that talk. Last thing I wanted to bring in here, I think we got a minute or two that I can at least talk about.
I've got to hop because
go ahead, Dennis. You do what you got to do, my friend.
Now.
Go do what you got to do. Yeah, Dennis got to go do trading, right? He has got to go focus team. But I did want to bring in a little bit of talk about the 3 stages of the Golden Cross and why I was in a little bit of the short-term bullish outlook today. Of course, the Golden Cross is when the short-term moving average moves across above a long-term moving average. A Golden Cross is, of course, a technical chart pattern. But a lot of the times what I've seen is that, and you can see it on this graph, if you make it, you make this pretty big, you can see when the stage 2, when we get that cross, a lot of the times we'll have a nice price action that was before the cross that got us to that cross. What do I mean by that? A nice grind up. We saw this with, of course, that January effect, that big move up. That's what got us to go to stage 2, which was the cross. Now, a lot of the times what you see, and you even see it on this chart, you see a deep pullback after that cross. That's what I feel right now we're in the market, in that deep pullback phase. And now we could run into the stage 3 uptrend. I think that this could actually happen until we run into, of course, CPI or maybe an interest rate focus. Of course, the narrative shifts here because very quickly, 2 or 3 weeks ago, we were talking about no landing, soft landing, and talk like that, right? No recession talk. And then now really quickly, we're right back to it, right? And so keeping up with the narrative right now is very difficult. You can always have tape bombs that come in, but I think we got to pay attention that we still are in kind of a bullish trend in the short term. Long term, we still haven't gotten into a bull market. I talked about this on Twitter. Bull markets are when we're back above 20% from the lows, which puts us at around 420. Until we get to that spot, it is not a new bull market. This is a dead cat rally. But if you look, Golden Crosses have in the past shown us when we start to switch from a bear to the bull market. Doesn't necessarily mean that when you see the Golden Cross, you're in a bull market. It just sometimes has a tendency of showing us that shift in sentiment. We'll see what happens. And like always, I think you always take it with a grain of salt. And if you look, the Golden Cross, for example, according to some studies, the S&P 500 has tended to perform better after the Golden Cross at an average gain of around 10% in a year following that Golden Cross. So we could have a dip, and then following that, get that break. We'll see what happens. I'm in short-term bullish camp. Come find out on live trading what we get into today. I got a couple of swings I'm excited to take a look at. Picard looking great. I got out of NTR, but man, that one's really been pushing. We'll see what happens on these charts. MOS really strong. Come check out what we've been talking about. And if you haven't checked out my Start Swing Trading show, well, you're missing out on a lot of trade ideas. Like always, you guys make your own investment decisions. But I talk about a lot of my ideas on there and bring on guests. We had Emery Band. We had Christian Fromhertz. Today we have, of course, Michael Noss, a CMT. So if you guys want to check that out, I'll see you guys on Start Swing Trading. That starts at 3 p.m. to 4 p.m. weekdays. And of course, if you guys want to keep up with Joel, you guys can check out the close and print. I'll see you guys on live trading. That's coming up next. And don't miss our book club. Our book club is going to start getting into Japanese candlestick charting patterns. So if you want to talk a little bit about candlestick charting patterns, want to learn a little bit more, join the book club today. You don't want to miss out on it. We get members every single day. So we're going to keep pushing forward. Now to bring you over to some live trading action. We'll see you in just a little bit, team. Smash the like on your way out. Hope you guys enjoyed today's action. Like always, all content is for informational purposes only, not to be used as investment advice, and opinions do not represent those of Benzinga. Hosts and guests may maintain positions in the securities discussed. We'll see you next time, team. Smash the like, and let's keep going.